This is China, the second largest economy in the world that is right now facing a property market meltdown 10 times bigger than Evergrande, aka the world's most indebted property developer, as its $310 billion in liabilities amount to nearly 2% of China's annual GDP. Last year, we saw Evergrande missing bond payments after bond payments, and the company was hanging by a thread as it was facing 367 lawsuits from Chinese creditors, according to Financial Times. You might wonder why this problem hasn't been in the news recently, as last year, everyone was proclaiming this to be China's Lehman moment. Well, as of recording, state intervention has prevented the total collapse of Evergrande. But again, this is a problem much bigger than just one company. Other major developers like Kaisa, Fantasia, Sunac, Modern Land, and many more have the exact same problem. Actually, the whole Evergrande saga won't be much of an issue if Chinese property developers, state-owned companies, local governments, and ordinary people alike don't have excessive amounts of debt. But indeed, they do. And 15 years of debt accumulation in the most important sector of the Chinese economy will have severe political, economic, and social costs. So today, we will discuss about everything that you need to know about this situation. And there's a whole lot that you need to know, so stay with me here. We will first break down exactly how China's property market actually works and how the debt bubble begins. Then, we'll examine the huge impact the property meltdown has on both China and the rest of the world. And we'll discuss about how the Chinese government is handling this dire ongoing situation. Let's get into it. Okay, so to understand just how crucial the property sector is, China's property market accounts for almost 30% of its GDP. For comparison, the US, which also has a big property market, it only accounts for 17.5% of its GDP. Land leases are the main revenue source for local governments, and 75% of Chinese household wealth is tied into real estate. It is the only thing that Chinese people invest in. As bank deposit rates were kept artificially low throughout the last decade, the stock market is kinda problematic with several severe crashes, and capital controls prevent investments to foreign countries. Because of this, it is no secret that housing affordability in China is among the worst in the world. It takes around 25 years of the average household income to buy a home in Shenzhen. Compare that to 14 years in London and 8 years in New York, and you can clearly see a huge issue here. The debt bubble pretty much started after the 2008 global financial crisis, when the Chinese government made economic growth a top priority to support its struggling population and maintain social stability. And the best way to spur economic growth in China is by fueling its property sector. So the government and its massive array of state banks began providing easy and cheap credit. As a result, residential property prices have more than doubled during the last 15 years alone. In China, apartments are usually sold out months or even years before they even begin construction, showing the high enthusiasm of Chinese people for buying property. Because owning property is crucial for retirement, upgrading your social status, and even for marriage, most people will gladly throw away their life savings and borrow money from multiple family members in order to get a mortgage. The demand for residential property is so massive in China that it has resulted in a lot of empty homes and apartments, around 25% of them in fact. There are even some cases of ghost cities like Tianducheng, Ordos, and Thamestown, where every single property in the city is sold out, but the city itself has no people living in it, as these properties are all bought by speculative buyers who have no interest in moving to the city or renting out the property. This is a major problem since empty homes don't bring any economic value while still incurring significant costs. To examine just how massive the debt bubble is, household mortgage loans increased almost 6 times in the last decade, to about $6 trillion. The combination of unrealistic growth expectations, social climbing, and the lack of alternative investments pretty much guarantee real estate to become the main investment vehicle for most Chinese people. Now, property developers in China know this all too well, and they develop a great business model to get the most out of it. Property developers would rake in tons of debt to buy as many land leases as possible. They will then design apartment buildings and pre-sell the units to regular investors, who will put down a deposit and wait until the buildings are finished. They then use this money as a down payment to borrow even more money and buy up even more land leases and develop new buildings. From the developer's perspective, this phenomenon forces them to also take on ever-increasing amounts of debt in order to compete and survive. In other words, if you are the owner of a Chinese property development company, you need to take on huge amounts of debt to be able to buy land leases. If you are too risk-averse for that, someone else will take that chance and possibly outbid you at every land auctions in good locations, which will destroy your business right away. This is evident from an auction from about 2 years ago, when a red-hot auctions market caused some land to be sold at 130% above the asking price, meaning that developers were more than willing to significantly overpay for land. China's property market is also facing the problem of moral hazard, similar to the US's problem during the global financial crisis as huge bank bailouts angered most of the population. Investors, developers, and home buyers in China simply assumed that politically connected firms like Evergrande and many others would not be allowed to fail, especially as Evergrande is one of those too big to fail companies, just like Lehman Brothers. Of course, the Chinese government is aware of this problem and is doing its best to solve it. In 2015, a stock market crash of about 30% in less than 3 weeks had major implications on the financial and the real estate sector. Since then, President Xi has tried to reduce leverage in the property market, saying publicly that housing is for living, not speculating. But no one listened to him, and the government was reluctant to take forceful action as doing so will significantly lower economic growth. This all changed in August 2020. When Chinese regulators introduced its 3 red lines policy. It consists of hard limits on the company debt to asset ratio, debt to equity ratio, and cash to short-term debt ratio. Basically, this means that the government has had enough with excessive leverage and wants to stop it. This is a huge problem for Evergrande and other over-leveraged property developers, as they can no longer borrow more money to fund their operations, which is the foundation of their business model. To meet the regulatory requirements, developers were forced to pay down their debts and reduce their investments. They have to liquidate assets, fire more workers, and sell more developments in order to keep the money flowing in, often at a massive discount in order to attract buyers. Immediately, housing demand decreases as home buyers wait for prices to drop even more and see if they can get a bigger discount. As this happened, non-performing loans related to property increased rapidly, reducing banks' appetite to finance property developments and worsening the financial shortage. This all came full-blown in September 2021, when Evergrande admitted that it was under tremendous pressure and could not pay its massive debt obligations. And a lot of people were shocked since this is a company that has never reported a loss since its founding. Soon after, other property developers followed and defaulted on their debt obligations, creating a property market meltdown that we see today. Okay, so what are the impacts of this meltdown on the Chinese and global economy? Well, as you can guess, it's a lot. The property sector is a major employer as Evergrande alone employs around 200,000 people, with another 4 million subcontractors that erect thousands of buildings for them every year. As the issue intensifies, unfinished projects and unpaid subcontractors are becoming more and more common. All of those people depend on Evergrande to be able to finance new developments in order to work and get their salaries. In addition, there are 1.5 million people who have placed deposits, which may be their entire life savings, on homes that may never be built. Extrapolate that to every struggling property developer, albeit on a smaller scale, and we can see how this is damaging the economy. Beyond job losses and unfinished projects, property developers owe a significant amount of money to both Chinese and offshore creditors. Since 2021, Chinese developers have defaulted on 8 billion in offshore dollar bonds and 757 million in onshore yuan-denominated bonds. Foreign creditors that have significant interest in Evergrande, for example, include BlackRock, Ashmore Group, UBS, ASBC, and many more. The uncertainty that we've seen in the credit market is dangerous because creditors are reluctant to restructure their debts and issue new financing, further depressing the property market. In addition, property developers in China have significant debt obligations to local businesses. This is because after the Three Red Lines policy was implemented, many developers turned to cash-rich local businesses like hotels, restaurants, and pharma companies to get their funding, with some reports saying that the annual interest rates on these loans are as high as 73%, which is insane. We don't know how many of these loans exist, so these undisclosed loans may spread the problem to other sectors much wider than we expected. So unemployed workers, unfinished projects, home buyers not getting the homes that they've paid for, credit market crunch, and local businesses not getting paid. But there's more. I mentioned before that local governments rely on land auctions as their main source of income. And after the Evergrande saga in September 2021, the auctions market looks pretty much dead. Private developers were nowhere to be seen since they didn't have any money to buy anything. And many auctions failed altogether because either the asking price was too high or no bidders showed up during the auction. The declining revenue of local governments will significantly impact the economy, as they have to cut back their spending on public services such as education, infrastructure, and welfare. Okay, so how the heck do you solve a problem of this magnitude? And what is the Chinese government doing? But before we answer that question, we need to keep in mind that the government is the one that caused these problems willingly in order to solve the debt problem. So they must have some sort of plan here. And they've actually done a lot of things. First of all, the Chinese government has intervened to prevent a disorderly collapse of Evergrande to prevent widespread panic in the financial markets. For example, they did this by pressuring creditors to extend their payment deadlines. This is possible because Chinese regulators are both powerful and credible. As of recording, it is unclear how the restructuring plan will work, since Evergrande sets the end of July as their deadline for setting up a restructuring plan. Possibly China's biggest debt restructuring event ever. But it is likely for local governments or state-owned developers to take over existing projects and to some degree buying up worthless assets like parking spaces, while the developer continues to sell its valuable assets simultaneously. After that, the shareholders will likely be wiped out, including Evergrande's billionaire founder and chairman Hui Ka-yen. Most analysts have predicted that not all creditors will get equal treatment, as meeting all of their needs is impossible when you're drowning in debt. China has explicitly said that social stability is its biggest priority, so this means that retail investors, local subcontractors, and suppliers will get the utmost priority. Local banks are probably next in line along with other Chinese creditors, so the possibility of foreign creditors getting burned is quite high. But debt restructuring aside, there's another problem that is much harder to solve. Demand for housing has plummeted to historic lows. Property sales by value in April slumped 46.6% from 2021, the biggest drop since August 2006. So far, the government has reduced mortgage interest rates, lowered down payments for a home, and provided subsidies. And while these policies have their benefits, it's still far from enough. Demand for housing actually rose until April, but the zero-COVID policy pretty much negates all of that effect. Chinese state-owned property developers have also stepped up to buy land leases at auctions as a way to help local governments to earn their revenue. So far, the result seems to have been different between each city. In prime locations such as Shanghai and Beijing, there are reports stating that the auctions market has recovered as confidence is growing. For example, this June, out of 36 residential plots in Shanghai, 20 of them were sold in 5 days, and state developers contributed to about 80% of the total sum. But in other locations, developers are much more careful when it comes to buying land, with some cities canceling auctions altogether since they don't expect any buyers. And finally, we have to ask if all of this is worth the trouble. China implemented the Three Red Lines policy and other policies that purposefully strangle property developers in order to reduce debt within the industry. So, is all of this worth it? Well, it depends. China is intent on moving on from the high-leverage property sector and focusing on higher quality growth. But it also needs to accept lower GDP growth, which is very hard to do, especially for China. President Xi said it best himself. You can pause the video to read about his opinion on this. So, there are only 3 ways for China moving forward. It can continue to fuel the property sector with debt to ensure high growth, although it will be even more disastrous when the bubble finally pops. It can rely on other sources of growth like inventing new technology or higher consumption. Or it can accept significantly lower growth in the future. This is a fascinating problem if you're like me. And what China will do can dictate its future for years to come, including its effect on the global economy. Now, I briefly explained about China's contagion problem in my video about global debt, as a part of a bigger problem that we're facing right now. Feel free to click on it and learn more. This is Doverhill, and see you next time.